Charles Schwab. Thanks so much for being with us. So, what are your thoughts? You wake up this Monday morning and here we go, and it's Fed week, of course. Your thoughts on the action?
For sure, it's important to keep an eye on for what Powell, not necessarily what they do, or probably, it's all but guaranteed that we're going to get 25 basis points. But then I think the language is going to be really important in terms of what he says in the press conference. And from our view, what we've been saying recently is it's probably going to be maybe a little bit more of what's considered a dovish hike, where he's going to acknowledge, or maybe just look to acknowledge, some of the risks that have been building, not just within Russia, Ukraine, but now within the broader economy. You see growth estimates start to slow. Last I checked for the Atlanta Fed's estimate for the current quarter, we're just barely above the zero line for growth. So we're definitely starting to see a pullback in some of the economic data, and then the market weakness has, obviously added to some of those fears as well, and confirmed some of those fears. And then in the it's not a definitive trend in either direction. This is just kind of the nature of commodities in general, but causing, I think, investors to sort of step back a little bit and not necessarily extrapolate hyperinflationary fears that were being perpetuated last week, but also not extrapolate deflationary fears. Just trying to find a middle ground somewhere and try to decipher exactly what's going on.
Yeah, and with that, as we see what's going on with the Fed, so much, as you noted, some of the economic data we've been getting in showing a little bit of pulling back, slower growth, things like that. So the 25 basis points is pretty much a deal for this week. That being said, the Fed has to really tread carefully here because, too much is too much. They better not do too much because they'll be highly criticized, right?
Yeah, this is where the pace of hikes really is going to be carefully scrutinized, and this is where it comes into play. And I think one of the tough parts now, especially with the surge in energy prices, and yes, we're down from around 130 on Brent crude to around $100, as you were mentioning at the open of the show, but $100 is still up considerably, from where we were before. So even if we hover around that area, if it still has a one handle, and we're above $100, that puts a little bit more upward pressure on headline inflation. But we could still see maybe more significant headwinds towards actual core inflation. So you could get a split there. But the rub is that if we have higher energy prices, and that's going to put a little bit more of a weight on consumer spending power at a time when real incomes are rolling over and starting to contract a little bit, that's going to put the Fed in a really tough spot because they still want to maintain credibility by fighting inflation. But if it's going to be at the expense of or occur alongside demand destruction, both from rate hikes and then higher energy prices and higher oil prices, that's sort of a 1-2 punch to the consumer and the overall economy. So they definitely have to tread carefully. And I think we really have to take them at their word when they say they're going to be data dependent, because like all of us, they don't have a predetermined playbook that they're operating off of to say where inflation's going to be. They're adjusting their forecast just like all of us are.
And when we look at what's going on with the sectors, today we're seeing financials and healthcare among the best performers for this month. Energy has been the leader, and utilities. Any thoughts on any of the sectors for investors?
Well, we've neutralized our sector call as of last week, and that's our head of sector research, David Kastner. We were all sort of discussing the now pretty great amount of uncertainties, maybe the most you can ever get because of what's going on with Russia, Ukraine. It's just way too difficult to have a strong or a high conviction view on sector calls right now. So we've taken healthcare and financials from outperform to neutral, and then materials and industrials from underperform to neutral. Just sort of leveling that field because it's very tough to have a call that way. And as we've been arguing, especially for the stock picking oriented crowd, having a factor-based approach has been much more consistent over the past year.
Right, understood, and it makes sense. It makes sense. Tell me a little bit about the economic data, other than the Fed that we're focused on. We'll get PPI tomorrow as well. A little bit about that. It's likely the estimate's a little less than last period, right?
Yeah, a little bit of a rolling over. We've seen some softening in the PPI data, and that's supposed to, at least historically, it's been a leading indicator for some of the CPI data. And as you know from last week, CPI was was hotter. It was in line with expectations, but still running at the fastest rate both at the headline and the core level since 1982. I would say some of the good news within that report was that areas that were driving inflation higher last year, like used cars, new cars, anything transportation related, at least on a month-over-month basis, started to see a lot of softening. But the offset is that you're getting stickier components like services and especially the rent and the shelter components continuing to rise. So they're a heftier weight in the CPI in general. So if that's more than offsetting for the goods, at least in the near term, then that's going to keep upward pressure on CPI itself.
Right. It's great to see you. Thank you so much, Kevin Gordon of Charles Schwab. A great preview of this week and a decent start for investors today. Thank you. And plenty more to come right here on Trading 360. John B. Sanfilippo is with us. Son is in the 360 Spotlight. It's a nut and snack food company celebrating the 100th anniversary. So the CEO is ready to join us and talk all about this one and also how it's handling inflation. Squarespace is today's disruptor. George Sills tells us why. It's on his radar and has an example trade. The stock is jumping. And we will discuss consumer discretionary stocks in our 360 round. One analyst tells us why the bigger names are likely to outperform this year. And up next, you're ready, the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein goes through the technicals. Joel Hawthorne from themorningsnapshot.com takes us through the trades for Las Vegas Sands, DocuSign, and Qualcomm. Coming up.
Technical traders, the chart master in the building. Trends, support and resistance, key patterns, and technical indicators. The chart master has your live technical analysis throughout the trading day, only on the TD Ameritrade Network. Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
Proceed. What's going on?
Thinkorswim Trading equips you with customizable tools, dedicated trade desk pros, and a passionate trader community sharing strategies right on the platform. Because we take trading as seriously as you do. Thinkorswim Trading from TD Ameritrade.
Taking one last look at my dashboard before we board.
And you have Thinkorswim Mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
Welcome back to Trading 360. I'm Nicole Petalides live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Joining us now, Ben Lichtenstein will take us through the charts. Then he'll take us through the trades. Joel Hawthorne, head trader and CEO at themorningsnapshot.com. Thank you both for being with me on this Monday. So we're looking here first at Las Vegas Sands. Why is this one on your radar, Joel, this morning?
Good morning, Nicole. Good morning, Ben. Just definitely, I think, just really looking at the chart. I mean, the chart is extremely weak here. Looking at a daily chart, looking at a weekly chart as well, we kind of see that this is a name that's been under pressure for a while. pairing the names that we're going to discuss today with just overall market sentiment. I think there's a lot of fear in the market. So I'm just kind of putting those two together and really trying to find that ideal sweet spot, if you would.
Understood. Do you understand where he's coming from, Ben, as he says that?
I do. Good morning, Nicole. And hey, Joel, I have to say, this Monday morning, I was fired up when I saw the list of names that we were going to take a look at today. Joel, you are spot on in terms of picking some stocks that have been on the move. And, well, in this instance, we're talking LVS first and foremost, and it has been on the move to the downside. It's been trending lower. For those who watch the 5, the 30, the 60 minute as we're looking at here, for example, the more granular time frames, you've been seeing quite the drop from this 48, we'll call it $50 level just to keep with the nice round number, all the way down to 33. And let's just zoom out a little bit in terms of time, because I want to point out here that this is a bit of a reversal in terms of what we had been seeing. And this move from 48, as we just noted, we're talking about since the middle of February, kind of, well, again, took out some momentum to the upside that we had seen since the beginning of the year. They opened up January around the $37 level, added on about $11, but since then, as you can see, as mentioned, down to 33. Now, take a look at the daily time frame. It really shows how we're still holding right around some key supports. So a couple things when I see price reach this lower extreme, I realize and take a look at, well, first and foremost, we have been trending lower as we've been establishing. So again, on the bigger picture, we've been coming off, but we're near, again, as mentioned, a lower extreme. So we have heightened awareness, whether you're bullish or bearish here. The bears are looking for a breakout and continuation of this trend to the downside, and then not only breakout below this key support area, but spend some time below it and accept value at a new lower level. But the bulls are hoping that, again, we'll find a reason to bounce fundamentals, or potentially the bulls will just step up from a technical kind of standpoint here. We're looking at potentially seeing, again, a situation where we've been below the 50, the 200-day for a while. I just wanted to point out on the weekly, it doesn't really show much more in terms of revealing any more information. But as far as if we do break down below this key area, the $30 level, that support, I'd be looking at 23. The bulls don't want to see it take out 23 again. Just it sort of opens up the door for continued price decay. But you can see, again, we were talking about, again, some of the trend environment to the downside here. This is kind of rolling over, topping out kind of patterns. They maxed out around that $85, $90 area and kind of double topped up there. So some weakness, to say the least here. A stock that's been on the move lower, and at this point, not really indicating that it has ended this downside trajectory. It's really building momentum in many ways to the downside as it opens up the door.
Yeah, I mean, it really has fallen off lately, Joel, as we take a look at that. What also is impressive on the other side of the coin is the last earnings report. When we took a look, you saw that gap, well, at least ahead of the earnings report, it had gapped higher and had that jump ahead of it. So I wonder, as we start to hear more from these companies, what we'll hear. I mean, there's no doubt Russia-Ukraine is weighing on hospitality and leisure. I think people just started to get nervous and just sold off everything. So now what? Tell us more about your trade.
Absolutely. I think just in the short term here, I want to put on a bear call credit spread that expires this week. We know we have a very important week this week with Fed news and all of that. So I do think that even on days like today, where there's a glimmer of hope with seeing some buying, some risk on slightly, at least to start the session, I think that we're still not out of the woods for some of that bearish momentum. So because of that, I'm going to sell the 34 call while simultaneously buying the 37 call on that bear credit spread, risking $1 to potentially make 49 cents. The break even on this trade is $34.99. That level in itself really trades us back to a bit of a gap up if we do reverse. So that 37 level that I'm buying that call is a bit of protection. And again, that's break even $34.99 for this Friday. March 18th is the expiration on this credit spread.
All right, good to see that one. And you have a similar trade now as we turn our attention over to Qualcomm, which had a recent high of 193, but is well off that level. Recently raised the dividend. I mean, there was some good news there, but has been under pressure since its high. Your thoughts on this one, Joel?
Absolutely. I think this is another one of those names where there's just a lot of fear and uncertainty in the market. Yes, this name may have some longer term optimism. But right now, when we look at a VIX that's trading around 30, again, this week, the uncertainty what's going on with the Fed. And also, like you said, the geopolitical news, that's really just overall, I think a lot of these names are heavily weighted to the downside because of that uncertainty. I like a bearish play here as well. I think there's more room if we continue to get some momentum. If we break the 145s, I think there's some more room to the downside there. So I just want to look definitely from the bearish perspective.
Okay, and so a similar bearish perspective here on Qualcomm as in Las Vegas Sands. Ben?
Well, I can see why. A very similar bearish type chart pattern playing out. Las Vegas Sands, we talked about the move lower from the $50 level down into the 33 area. And here in this instance, we're talking about a significant move lower as well, from 198 all the way down to 148. Now, I just want to point out here that, again, in a similar situation, a little bit different in some instances, but again, in a similar situation, as we kind of just zoom out, you'll see that, well, this weakness has been coming into play after a bit of a topping pattern here, where we kind of, again, fell short of being able to get anything going to the upside up around 190, 195. You can see, again, as we work our way back to levels we haven't seen since the middle of November.
Okay, what's up, guys? Welcome. So this is the I'm labeling this like episode 2 of the late night stock market talk. Guys, there's a lot of things going on. Okay. So the way I'm going to do this, guys, is I'm going to kick it off. I'm streaming live on YouTube and also on Twitch, okay? And so this is going to be a regular show that I'm going to be doing in the late night, where I pretty much talk about the market. So shout out to all of you guys who are live for watching right now. And this is going to be archived. So for those of you who maybe can't catch the whole thing or are going to watch it later, I'm going to kick it off by first talking about what I'm looking at with the markets. And then after that, we'll get into the community discussion. I'll talk about, we'll pull up the charts and, share what I'm in, what my, what am I long, what am I short, and all of that stuff. But let's start off with the bigger picture, the war. All right. Good thing is that the war looks like it's starting to calm down. Okay. If you were paying attention, you know that this is, it's pretty clear that this war was really just a proxy war between NATO, which is really just the United States, and Russia. But the signs are looking like, again, the war is getting ready to come to a conclusion, I guess you can say, with Ukraine either negotiating with Russia or a flat out Russian victory. Okay. But I want to talk about that because that's very, very important to what is going on economically. So follow me on this. It's all going to circle around, and it's very well packaged. Okay. I kind of thought this out and why it's important to talk about these things. Okay. One of these options is going to happen. Again, Ukraine is either going to give up, and hopefully they do, instead of, continuing to put their people, in the front of the guns. Just, lay down and kind of run with it already, or again, like I said, it's just going to be a Russian victory. One of those things is play out really, really soon. But what I think we all need to gain from this, okay, is that yes, while the whole war between Ukraine and Russia will inevitably come to an end, it's shifted so much of the world. The world is literally not the same world that we had weeks ago before this whole the war has started. Okay. You might say this is Russia's fault, but in reality, this war was actually started 8 years ago. And the States were the ones who initially lit the fuse to this whole charade with a coup that was kind of took place. We don't need to go that far back in history, but this is, this was set in motion 8 years ago by the United States. Okay. The way they've approached the whole Ukrainian crisis, though, has been completely by the book and very much on point when it comes to war psychosis on the general public. Okay. I mean, they're doing things like banning Dostoevsky from colleges and all this crazy, cancel culture stuff on guys who've been dead for over 100 years. Okay. I mean, these people have literally nothing to do with this crisis, yet they're being canceled. And that's pretty much what the world has become now. Okay. Our world has become a cancel culture. Okay. Where it's now spreading to try to involve the rest of the world, which again, I'm going to circle around. We're going to go into that later into the discussion, but it's important to see the connection between the local, the regional, and inevitably the worldwide cancel culture movement. Okay. First, it starts here in our backyard, then it's another state, then it's Canada, now Russia, and eventually China. Okay. That we're not there yet, but soon to be, we could very well be there. Okay. You got to stand back and connect these dots if you're going to understand this from an economic viewpoint, okay, from a market viewpoint. This whole, situation is going to bring a lot of movement in energy. The energy bills are going to continue to rise. And what I want to tell you is that the cost of living here in the States will soon hit a level where you're going to get people having to make a decision on what bills they're going to pay and which ones they're going to default on. And I talked about that a long time ago when I started my channel. We're not at a point yet. The market cannot crash until we get to the point where people are literally deciding what bill to pay. That's when things will really hit the fan. Okay. We're not there yet, but make no mistake, all of this geopolitical movement, all of these sanctions on Russia and all of the Fed, the bubble money, it's going to continue to cause the prices to rise, period. Economics 101. You see, inflation right now is rising at a much faster rate than the incomes. And if you're already in a low income bracket, then you're going to be the first one to get hit, with where you're going to see that the inflation is larger than your wages, than your benefits. I mean, I'm not trying to drive this fear. I mean, there's plenty of that in the market. But again, people soon are going to be forced to not being able to drive their car, or at least really monitor their trips, making sure that they can afford the gas. Okay. And I believe, it could hit $7 to $8 a gallon. Okay. Most people, probably a good chunk of people, they can't drive their car to work with those prices. So you've literally jacked up the gas bill like 200-300% in some of these states. So if they're already struggling, this is simply going to be the bill that they literally can't afford, or something has to not be paid in order for them to pay gas to get to work. The price of heating, the price of cooking meals, of turning on the AC, summer's coming along. Okay. That's going to put more strain on energy. Okay. If you want to, take a flight somewhere, that's going to affect the price of the airline ticket. You want to catch the train, that will affect the price of the train ticket. The cost of everything is going to go up so fast that at some point, again, people are not going to be able to afford it and keep up with it. Okay. And at that point, who is going to be the one to blame for all of this? Okay. Now you got President Bidenstein, who wants to, blame it all on Putin. Oh, it's Putin's fault. It's not the Fed's fault. It's not his fault. It's all Putin's fault. Okay. And if that was true, which it is not true, but if it was true, then here's a problem though. Americans can't vote out Putin. And the other thing too is that if he is that strong that halfway around the world he could affect the economy, then it just shows how weak Biden really is. Like, wow, this man has more control over your economy than yourself, than the president. So either way, it looks bad on him, okay? Now, I don't want to get into this political discussion, but here's the point. When people cannot pay their bills, when they cannot go to work and drive their car, they will be voting, taking this anger to the polls. And, you know, like I said, they can't vote out Putin, but they can vote out a lot of Democrats in the upcoming midterms. Are people going to be upset enough to actually go and show their anger in the polls? I don't know if most people, well, if a lot of people are going to, you know, see all these things and connect the dots. Hopefully they can, but I don't know. I don't know if they'll be able to see, you know, all of this. But one thing is for sure, they will be able to see the rise of all of their bills, okay, going higher and higher and charging more and more. That's for sure. And that's for sure. See, the thing is, the economy has gotten so wrecked. I mean, it's wrecked big time. I told you about the bubble last time I did the live stream. I told you about the bubbles that the Fed was creating and that have been being created and now are being popped or have been popped. Okay. Again, we still have a giant bubble that is going on that hasn't been popped, and that's the housing and the financial market. This is probably the biggest bubbles right now, bigger than all the others that we've had. And now you have the uncoupling between the markets of Russia and the United States. Okay, so now circling back around through all of this, okay, do you guys have any idea how all of this affects China? That's the question that no one's asking. How does this affect China? How does this affect India? People naively think that this is still the 1950s where the whole world revolves around the great American superpower, but they don't see that in 10 to 15 years' time, China is expected to be the largest economy in the world, surpassing the States. So how does this uncoupling between Russia and the States affect China's economy? You have to see the larger picture. You have Biden, again, this senile, moronic president, making these economic decisions that have nothing, you know, but negative and terrible consequences on our economy. He's wrecking the economy. Jobs are just not there. Small businesses gone, right? Ever since he's taken office. Now, again, I'm not trying to step on anyone's toes, but we have to look at everything that's going on, okay? Let's change gears now. Now that we know geopolitically all of this stuff going on, Biden throwing the finger at everybody else, we have to ask ourselves, okay, all right, I get all that, you know, whatever. What does this mean financially? What does this mean for the market? That's the big picture, okay? These sanctions are not going to affect Russia the way they're going to affect us, the way they're going to affect our financial markets here, okay? You guys ever seen somebody throw a boomerang? This is all going to come back to us here harder than it is over there. Everything that Biden is doing is going to negatively impact you, me, everybody in this entire country. Unless, of course, you're rich and wealthy, who, you know, they what do they say? Just go out and buy a hybrid. Okay, go out and buy a Tesla. I know you can barely afford to pay gas, so just, you know, go and buy a hybrid, right? This is the modern day equivalent of Marie Antoinette saying, let them eat cake. When Biden sanctioned Russia, Russia responded by blocking many raw materials and commodities for export to our country. Now, I don't know if you guys know this or not, but Russia is the largest producer of wheat in the world. Now, how much wheat is going to come to the United States now that this sanction is in effect? Zero, none. So what do you think that does to the price of wheat and the foods that depend on wheat? The price of wheat is going higher, guys. The price of food will be going higher. On Friday, the London Metal Exchange, they had to shut down because of the collapse in prices on some of the economy, on some of the commodities. Now, why? Russia, again, produces all sorts of components that the manufacturing world needs. The semiconductors. What do you think this does to the semiconductors, which rely on a lot of those materials? Now, I tell you what, guys, if we've had a slowdown 4 months, well, this is not going to help any of that. You could be looking at people waiting close to a year for some of the products, a year, maybe more. We're not a country that makes and creates, okay? We are a service-based country, service-based economy. Everything else is made everywhere else. China, Indonesia. So did those countries sanction Russia? Of course they didn't. And you want to know why? Because they're not stupid enough to jack up the prices of their own goods like our old stupid senile president Joe Biden. See, despite what you've been told, what we've all been told, Russia is not just an extraction economy. They're the biggest producers of nickel. You guys know what you need nickel for? Pretty much everything. Car batteries, everything. So what does this mean for us? If we can't get nickel, we have to look at an alternative market where we can go buy this stuff from, right? So we're going to have to pay more for it, because think about it. If you're a country which makes nickel and now nickel is in high demand because of sanctions, do you think you're going to sell that nickel for less? Of course not. We're going to be paying through the nose for all of this stuff. Or we're going to have to stop producing because we just don't have the materials. Now, what do you think happens when companies stop producing certain products? That's the second thing. That's the second phase to all of this, okay? What happens when a car manufacturer doesn't have enough steel to make cars? Layoffs. If your production stops due to material shortages, people get laid off. You don't need them anymore. Why do you need people working at a company when they're just sitting around? They don't have nothing to do. Okay. You're already hurting because you can't sell your product that you were selling. And now you have people sitting on the assembly line or in offices and they don't have anything to do. Okay. Do you think the companies are going to pay people to sit around and wait? No, they're already bleeding. Okay. They're going to have to lay them off, not because they're heartless businesses, but because business itself has slowed down. You can't pay people when your business is not making business. So that's the second part to all of this. Now, the third part, what about the banking crisis? That's brewing. People don't even know about the banking crisis. This is going to be a repeat of the financial collapse of 2008, but it's going to be worse. The financial sector has already, if you've been looking at these markets, they've been getting heavily sold off. The market has been it's officially now in a bear market territory, right? But again, guys, most of the stocks have already been in bear markets long before the indices officially became a bear market, okay? Now, let's talk a little bit more about this banking, okay? This is very, very important. We cut Russia off from the SWIFT banking system. Now, if you don't know what that is, it's basically the banking system that, we use to conduct business around the world with other countries, okay? We cut them off from that. What does that mean? Does that mean that Russia can no longer do business because they can't use our banking facilities? Absolutely not, okay? If you're just watching these idiots on TV, then you might think that Russia's actually sitting there like, oh my gosh, what are we going to do? We're cut off from the American banks. The reality is that it means Russia will now be part of the Chinese banking system instead of ours. So what is the consequence of Russia conducting business now in the Chinese banking system? The consequence is that this is going to be the de-dollarization between countries doing business. So countries like Venezuela, which we'll talk a little bit more about that later, but we recently went there begging for oil. But you got Venezuela, you got India, you got Iran, countries which did business using the American-backed SWIFT banking system are now looking to conduct business using the Chinese CHIPS system, okay? In other words, what this does is it grows the Chinese banking system and it weighs negatively on the value of the US dollar. And our country doesn't have the domestic manufacturing capacity to benefit from a weak dollar. And why? Because we're heavily dependent on other countries to make things. We do not make anything here. We literally can't, pardon my French, but we literally can't even wipe our asses without being dependent on China. Okay, They even do that. They even produce that. Do you guys see where this is going? Okay. Everything that Russia produces now is going to be bought by China, by India, and by the entire East. Biden has strengthened the East stronger, united them stronger, with all these sanctions, strengthened their banking system, and nothing that they produce will be sold to us. Nothing that Russia produces will be sold to us. So add it up. We've got a manufacturing crisis in the works with all these shortages. We have an energy crisis now that is happening now, since we are actually dependent once again on OPEC production, since we don't produce our own stuff anymore. We have a banking crisis in the works with the inflation. And now we cut ourselves off from Russian exports, jack up our own prices with a sanction, which again doesn't hurt them because China just is there to, China is strong enough now to economically absorb all that, which they did. So it backfired and it hurts us most. So listen to me when I say that this is going to shake our entire economy to its core. Not only the economy, but people who have no idea how the economy works or have any exposure to the financial markets. I'm speaking about the lower income Americans. They will feel the brunt of this economic earthquake the worst. And this is an enormous shift that we are in the midst of. Guys, this is a shift in power. This is a shift in wealth, a shift in influence, and it's going to change everything, the whole world as we know it. We are already losing our status as a world power right in front of the whole world stage. The balance of power is shifting. And then you have Joe Biden begging Maduro in Caracas to up oil production, when not too long ago, we were actually trying to overthrow him and have him killed. And now we're begging for oil? This is the leadership we have right now. It's a freaking clown show, okay? And of course it failed. The guy gave us the bird and told us to go our own way. India, all right, let's talk about India. They were given a hard time from Europe, from us, because they've taken a stand with Russia. Not only them, but you also have the African countries. Those countries know how the U.S. does business because they've been affected by our policies and by how we conduct business around the world. Now they're being given a choice to either side with the States or side with Russia/China. Let me ask you something. Has Russia or China ever occupied any African country? We have a history here, guys. We have a history that people around the world have been affected by for years, and they're questioning if maybe the world is better without having the Americans pushing them around. Which countries pillaged many of the African people, and has that pillaging economically stopped? A lot of things have stopped, but economically, is the pillaging stopped? Are we still economically benefiting from their economies? Let's just say that. Let's bring it back closer to home, okay? Because again, this is on their minds right now. They have a shift between, what do we do here? We've been using this banking system for a while. You got Russia and the US, you got China. Everybody the whole world is questioning this, okay? It's a shift of power. Again, let's bring it back closer to home. Latin America, our neighbors to the south. Every country from Mexico to Chile has China as their biggest trading partner. So if Russia and China are now conducting business using the CHIPS Chinese banking system, do you think the world or these countries are going to continue to go with the SWIFT system? Or do you think there's a chance that they may shift over to CIPS? Again, this is the beginning of the devaluation of the dollar in the world of business and banking. More transactions are now going to start occurring using the Chinese yuan. So again, this is a huge shift. You know, my daughter is learning Chinese. Okay, let me give you a tip, guys. If you want your children to be ahead, make sure they learn Chinese. It used to be that if you didn't know English, you were lacking the language of the world, the business language of the world. But in the near future, more business will be conducted in Chinese than in English. So that's just something to think about with all of this stuff. Now, financially, on the markets, everything that's going on, I'm going to pull up the charts now and we'll get into it. But I wanted to kick off this episode by talking about a lot of this stuff because it's bigger than we could imagine. And again, I'm just going to sum it up. This is a shift of the balance of power. That being said, let's go ahead and kick it over. Let me open up the charts and we will start, you know, seeing what's in the works on Wall Street. Okay, there we are, guys. Let me adjust this screen here.
Wow, very
and
thank you so much, George Sillis. Great
there we are.
example trade there
Got a little
as well
okay.
as the explanation of the day. Appreciate it.
All right, guys. So that is it. Let's I'll wrap it up with what well, actually no. Let me kick it off with how last week turned out. Okay.
Inflation continues to rise. One of our panelists
Adjust this
says,
here.
"Look at the established names."
Here we go. LVS. We're just looking at LVS. All right, guys. So
Let's walk through
lower
charts.
this a little
One of
bit.
the
This is
most
a little
commonly-
too.
Start by going to the charts.
There we go. All right, guys. So last week was a good week in terms of you know, what was going on, what I was trading. It was a green week, and I'll show you what I'm in right now. Okay. I guess we should start it off. Let's start off in terms of P&L. Okay. We'll skip the options because those are going to be big. You know, the options are usually big swings in terms of you know, P&L. But I am in all of these stocks anyways. Ventas, Colgate, Discovery, Mondelez. Okay. So these are, of course, these are the options. But Starbucks has been a real winner. Okay. I've been shorting Starbucks for a while. Today, it was, you know, I mean, it was just continuing selling off of Starbucks. So that has that's been a pretty good trade, and still seems to be a good trade. I will still continue to short that. We have Ventas, VTR. This is another stock, VTR. This is a long, okay. Let me make sure that I have the. All right. So guys, this is a long VTR. Again, a really good trade. Still, you know, what I started off with a pilot position on VTR. This is a real estate REIT. It's benefiting, of course, from inflation, and has been doing nicely. So as this has been moving up, I've been, you know, kind of adding to my position, but also taking profits. Okay. But nonetheless, I'm still very much long on VTR. Dollar Tree, I picked this one up, and this one has just been showing some great relative strength. The market has been tanking. It's been having some rough days, but Dollar Tree just, you know, it continues to hold on really well. So Dollar Tree has a lot of you know, relative strength. Okay, this stock has been doing fantastic. It's not really rocketing, okay, but it's holding on very, very strong. And of course, what's going to happen with inflation? I talked about all of the stuff that's going on, guys. Where do you think people are going to be shopping when the bills get tight? Okay, they're going to be going to Dollar Tree before they go to Target, before they go to Walmart. Okay, if you know, whatever it is, okay, Dollar Tree is where people are going to go when times are really, you know, really hard financially. That's where people go. Okay, and even when they're not, I mean, I like going to Dollar Tree to buy a lot of, like, you know, whatever. There's a lot of great deals there, right? That's where you go for the cheapest goods. Okay, things that you're gonna just throw away. If you're having a birthday party, you can get all this stuff there for cheap. Okay, you can go with like $10 and you get the plates, you get the party hats, you get everything. Compare that to like Party City. it's going to cost you a lot more. Compare that to Walmart and Target, they're going to cost you a lot more. So I'm very, even when it comes to daily shopping and whatnot, I'm very budget. I'm always looking for, hey, what's the best deal here? Okay, how could I best spend my money, put more money in my pocket, and not waste it on just paying higher prices. So if I'm thinking like that, okay, you're going to have a lot more people who are going to be thinking like this when, again, you have gas prices just kind of going through the roof. So Dollar Tree, again, it's holding on strong. I don't know, who knows where this thing goes. Okay, we don't really know, but right now we know one thing that the market is telling us. Okay, I'm telling you my opinion on what I think and whatnot. Just, I guess you can call that fundamentals, right? But what is the market saying? The market, the stock is telling us that, look, even though the market is going down 500 points, 300 points, taking these dips, I am not budging. I am still holding at 140 and up. I'm not budging past that. I don't want to go I don't want to go lower than 140. That's what Dollar Tree is telling us. So I started a pilot position on Dollar Tree, and as it breaks higher and does a breakout, I will add to my position and continue to add to it and build it up into, again, like I say, snowballing profits. Okay, it's not about how many, it's not just about the entry. Okay, it's not about the entry. It is, that's very important. But what's also as important as the entry is how many shares you have. That's also important. So, when it breaks out, I'll be adding more to my position, and we'll see how strong this one goes. We don't know how high a stock can go. That we cannot control. But what we can control is our risk. So as it goes higher, I'll add to it and again adjust my stops. Okay, so I'm moving with the stock, but I don't want to be so rigid where I'm just kind of in and out like a program, like a robot. You gotta flow with the stock. Okay. You got to flow with it. Okay. It's like Bruce Lee said, what did he say? Be one with nature, right? Be one with the market. Okay. You got to flow with the market. You can't just be rigid. So, again, we'll see where Dollar Tree goes, but it's been holding on fantastic. Franklin Resource, this is in the financial, services, and this is a put. Okay. So this is a put. Discovery, okay. This is a consumer cyclical. Look, this thing has been getting sold off fantastically. So obviously I am joining the party, okay, and have been shorting this thing. It's just now starting, in my opinion. Okay, and guys, by the way, this is not financial advice. I'm not telling you go and buy and sell these shares. You got to do your own homework, okay. All of the information here is for education, to learn what I see where I see the market going, to see how I'm trading it, but it's all for education. Okay. And so if you're going to go out and buy this, you got to do your own due diligence, guys. You got to do your own homework and figure it out whether it's worth it to you. But I'm not telling you, this is not a solicitation to buy or sell this stock, okay, or these shares. But I am shorting it. Okay. I've been shorting Disca, Discovery Inc., whatever. And I think that the party is just starting. I told you about the financial problems that are going on. Okay. We have a banking crisis that's just looming right around the corner. And, it's going to take out a lot of the market. Okay. The market is going to go, no, this is not Discovery, as in the Discover card, but again, I think this one is just moving. So as those things kick in, you're going to see if we kind of, you see here's the low on Discovery. I think it's not only going to travel there, but I think it's going to take off. So what I'm saying, guys, is this. I think that the train is just starting to take off to the short side on Discovery. So I am in for a pilot position, but I haven't just been sitting back with that. I've been adding to my shorts and taking profits the whole time, but I still think that this thing is, we might get a pop, okay, because it's fell pretty hard. I mean, it's had a good amount of down days, but I think Discovery still has, it's just starting to move. Okay, I see it breaking these lows, and then we'll see where it goes. By the way, I don't want to, don't think I'm ignoring the chat. Okay, I'm not ignoring the chat. I just want to go through my positions here. And after I do that, then we'll get into the community discussion. I'll pull up the stocks that you guys are asking about. We'll do stock reviews, okay? And we'll do some stock reviews and all that stuff. So don't think that I am ignoring you guys, okay? I'm not. I just want to make sure that, again, this is a show. This is an episode. I want to do this every Monday, so I got to kind of flow with it and kind of have a sequence of the show. And like I said, kicking off first with my thoughts on the market, and then going into, you know, the stocks that I'm playing, and then kicking it with the community. Okay, so let's kind of move on. Colgate is a short. You can obviously see why. This thing is just kind of breaking down really nicely. Colgate is another one. It's just been, you know, I am a position trader, guys. I'm not just like a swing trader where I just get in at some point and out at another. I start off a position and I gradually want to build to that, you know, and if I can, the trading, you know, my time horizon on a stock, and my ideal time horizon is anywhere from I would say, you know, I don't know, probably anywhere from like 2 weeks to, let's say about 7 days to 60 days. That's my ideal time. If I can, you know, kind of get into that, that's how long I would like a trade to ideally last. If I can get that whole time, that's going to be pretty fat, juicy, nice profits. Okay. Does it all, you know, do they all last that long? Do they all have that time? Of course not. They don't. Some trades I may start a position in and then I just get stopped out and they don't work out. That's okay. But I start off a position and then I slowly build that position. And like I say, if I can build that up over a series of, you know, from anywhere from 6, 7, 8, 9 days and keep building to that and ride it out for a good 30, 60 days, that's going to be a good trade. So CL may be one of those. You know, I've been trading this one for a little while now. I think last week I was also still in CL and I've been taking profits the whole time. So this one's already moving, and I'm still saying short in CL and Colgate. Got a couple more here, guys. Accenture, this is another short. I'm kind of going to speed it up a little bit as I go on, but Accenture, this is another short that's been doing well. Added a little bit more to my short position today, okay, as it failed to take out the 20. Who knows, maybe it kind of gets up, but it's all a matter of how much you're willing to risk. And so today was a good day for me to risk a small amount and see watch it break these lows. So Accenture is another one. What else I got? Walmart is one of the few stocks, believe it or not, that I've been long in, and I just added to my long position on Walmart again today. Okay, I started off a position in Walmart. Let me see here. I started off on the 10th with Walmart right here, and today again I just kind of added to it as it held, not only held the 200-day moving average, but it moved higher above that 200-day moving average. 1 second, guys.
That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines.
Okay, all right, guys. So yeah, Walmart, so Walmart I added to that. What else, guys? Mondelez is another short. I have a put on Mondelez as well, and this is another one. Started shorting it on the 10th. Actually on the 8th. On the 8th, as it broke that 200-day moving average, that's where my short started, and just kind of been adding to it ever since. And again, also taking profits. It's not just adding to it, but it's taking profits at the same time. It's that is the art behind the trade. Okay, you have some trades. Entering could be a science. Okay, where do you enter? That can kind of be a science. Okay, enter as it breaks a 200. Enter as it breaks above the 50-day moving average. enter as it takes, you know, the stochastics. There's usually scientific points with entries, right? But when it comes to taking profits, that is an art. Okay, that really is I can't really explain it other than that. There's not any specific formulas that I'm using, you know. It's just an art. So as it goes down, I'll add to it. If it goes down a little bit more, I'll take profits. You know, it's just this combination of both. So with Mondelez, that's been the case. Okay, as it's been coming down, you know, I've been shorting it and taking profits, and so we'll see how that continues to go. Kellogg's is I have a put on this as well, but Kellogg's is obviously a short, and Kellogg's I actually don't wait, actually let me see here. Okay, so Kellogg's, see, okay, so I don't think that Kellogg's is kind of done with this move here, even though it's fell pretty hard. You know, there's been some talk like, oh, it's fell, but if you see here, it held the support for quite a while and it just took it out. So I don't think Kellogg's is just kind of like done. I think this is another one that is just starting. Okay, and I definitely see it getting not only to these lows but possibly breaking them. You remember what I was saying about Russia and wheat and all of these, you know, all of these materials, right? Kellogg's uses wheat. I mean, you know, cream of wheat. I don't know if that's made by Kellogg's, right? But they use a lot of wheat. So the question is, now that we have these sanctions, how much products is Kellogg's going to be able to produce? How is it going to affect their products? Not only that, how is it going to affect the pricing? So fundamentally, these are questions that we are asking because of the geopolitics, but we also have a nice, beautiful chart to look at and confirm all of these things that we are looking at, right? The chart is telling us the same exact story. Kellogg's is in trouble. So I've been, you know, I jumped on that short. I jumped on that. Let me see here. I'll tell you exactly when I started shorting. Yeah, that was back right here, guys, right on the 10th. Right on the 10th. This is when I started shorting, okay? So, and why? Because that's when it took out that low. Right here's when it took out this low on the 10th. That's when I, you know, kind of jumped in with that and started building up the shorts. So yeah, I think Kellogg's is, you know, they're gonna have some problems for sure, some real problems. Campbell's Soup, okay, and there's a few others, guys, but again, these last here are options. I won't really get into that. But Campbell's Soup, another stock that, surprise, surprise, I am short. And I just told you why I was short Kellogg's. Same reason why I'm short Campbell's, okay? You have all of these issues going on. These sanctions, which again, these sanctions are only going to hurt us, guys, okay? That's it. The rest of the world, they're not hurting, okay? They're not really going to get hit so much, but we are going to feel the brunt of it. And these food companies are going to be the first ones to have a little bit of that taste, okay? And if you see here, again, as Kellogg's started to kind of, you know, break these lows and show that it has some problems technically, Campbell's Soup was doing the same thing, okay? In one day, Campbell's Soup fell pretty significantly. It fell like 8%, okay? And ever since then, it's just, I think this right here was the beginning of it. This was the beginning of the crack, okay? The crack that pretty much it shatters the whole thing. So again, I think this is just starting, Campbell's Soup, and I feel I'm right on time for this one. Okay, some of them have already ran. Some of these stocks they're already down a good, you know, like Starbucks. Let me see here on Starbucks. Okay, Starbucks has already ran. This one's already down like 25%. But we go back to Campbell's. Campbell's is just now starting to break that 200-day moving average. Okay, so this one I think it's just starting to go, and you know, we'll see we'll see how this one does. But Campbell's and Kellogg's, those are both stocks that I'm you know, for the shorts, I think they're gonna do nicely, so to speak. Okay. What else do we have? Boston Properties. This one is actually, Boston is one of my few longs. Okay. And again, this one's just, it's the same story. As the market was tanking, this thing is just holding up. Okay. So I think, you know, these inflation prices, it's only going to have it's going to have a positive effect on them, because some business are just going to have to pay higher rent, period. Okay. They're just going to have to do it. And I'm talking about large corporations, not small mom and pops. I'm talking about like H&R Block or, you know, these businesses that have to rent office space, period. Okay. They're brick and mortars, these large corporations. So I think, you know, the REIT sector that is involved in offices, I think they'll do all right. But that's my opinion. What is the stock telling us? The stock is telling us that also, you know what, with the market being down so much, this thing refuses to really drop. So again, you have relative strength showing itself here in the charts, and just holding nicely right above that 50. So, you know, this is, again, one of the few long positions in the portfolio. And next, we'll kind of run through these last ones real quick. But next is energy. And again, this is one that I'm long. Okay. Maybe a little early on this one, I think. But NextEra Energy is just starting to kind of, you know, starting to move. This is, again, I talked about, you know, the energy crisis, and here we have an energy stock. Put two and two together, you guys know why I'm long. Okay, I don't need to have to talk much more about this. Okay, so but I think I'm a little bit early. It's, you know, we'll see how it does. Okay, but if I do get stopped out of next knee, it wouldn't surprise me. Okay, I don't know if it's ready to go just yet. May have jumped into this a little early, but nonetheless, it's still a good trade, guys. You always get into trades where you have a good risk, where you're not, you know, it's like, hey, the risk is well worth the reward. So that's how I feel with Next. If I do get stopped out, I'm going to continue to watch it, and I'll go long once it's ready to go. Hopefully it's ready to go here. But the last week, this movement right here, it really didn't, you know, it really didn't give me a lot of good feelings about it. The fact that it was kind of like weak, but we'll see how it does this week. And that's NextEra Energy. Last is there's a few more, but PepsiCo, PEP. This is another short. Okay, and why? Food prices. Already talked about that. Packaged foods. Okay, this is a put. Look at this. Okay, I'm short on this. Short on General Mills, and we already talked about Campbell's and NextEra. So guys, this is pretty much my book right here. And you could see, you know, obviously what my P&L is. I'm one of the few streamers that actually shows what I'm in. Okay, I don't have any problem with doing that. I want to be transparent. Okay, if you guys are sitting here watching me and you're asking me opinions, you know, I kind of feel like the thing that I could do is show you what I am doing, what I am in, right? Or else, you know, it's like, yeah, I don't know. Look, that's just, I always gone by that golden rule. Okay, treat others how you want to be treated. And for me, whenever somebody is telling me about a stock, what's your P&L? What's your, you know, how are you doing in the market? Okay, what trades are you in? How good have they done? Okay, if you're gonna sit here and tell me what to buy, if you're gonna shoot, then I want to know, you know, how good you are. Okay, otherwise you don't really know. Okay, so I think that the least I can do is show you guys what I'm in, what my positions are, and you know, and be open with you guys. Okay, when I started this channel, that's something that I wanted to do, and you know, some people say, well, are you pumping your own stuff? Not really, guys. Okay, because one, I don't trade penny stuff. Okay, I don't do all that. I don't trade penny stuff. I'm trading, again, you guys can see Starbucks, you know, Dollar Tree, Walmart. These are large corporations. Okay, these are not like corporations that a few guys are going to get together, buy some penny stocks, pump it up, and then, you know, rip off people by pumping the stock. These aren't that. Okay. Funds, hedge funds, mutual funds, they can't move these stocks. They're too damn heavy. Okay. So, yeah, so that's another thing that was like, yeah, there's no, why not? Okay, these stocks are huge, multinational corporations. So, there's really nothing to hype. These are not unnamed, unknown penny stocks, so to speak. So again, just looking at the P&L, guys, the best position right now, of course, you have these, my options, which are doing well. But when we go into stocks and that's my bread and butter. My bread and butter is stocks and shares. I'm not an options player. I'm exploring options. Okay. Maybe I will be an options player more as we go into the future. But right now, I still consider myself mainly trading shares. I'm a trader who does not really trade options. I'm experimenting and, I'm experimenting with options. Okay. But by no means am I an options, trader. I just, I've been trading stocks and shares for over 15 years, guys. Okay. So this is what I know. That's how I trade. But of course, there's some options trading that I'm now starting to take part in. But the position that's been doing the best has been Starbucks. That has been fantastic. That's up 8%. Ventus following with 7%. Dollar Tree, 5%. Franklin, 5%. Discovery 3%. Colgate 3%. Accenture 2% or 2.6%. Let's call them what they are. Walmart 2.3%. Mondelez 2%. Kellogg's 1.6%, Visa 1.65. This is a new one, by the way. Visa was a new one. I really didn't go into Visa, but Visa is one of the new shorts that I took today. Okay, so this is a fresh trade with Visa, starting a position short on that one. And that one's again already up 1.65%. Got Robert Half. This is up 1.49%. General Mills 0.54, 0.5%, 0.54%. Hasbro. This is a new one as well, guys. I didn't even get into this. I missed these. Sorry about that, guys. But Hasbro is another stock today. My daughter said, "Hey, look at Hasbro." I was like, "What? Let me see." Wow, Hasbro looks like a good short, and so we threw that one into the portfolio with Hasbro, and this is one that she follows because she loves her toys, but even she's not a stranger to shorting companies. So Hasbro is a fresh trade. This is a new trade in the book, and this one has had a little bit of a run, though, I guess you can say. Okay, it's kind of been trucking along, I guess you can say, but we'll see. I want to see it take out these lows, but nonetheless, this is a fresh one here, and up 0.29%, a little bit. Procter and Gamble 0.28%, okay, a quarter, and then we have like Campbell's Soup. Okay, Campbell's Soup is actually one that I am negative on. This one's negative 0.21%, 21%, not 21. 0.21%. Okay, never 0.21% on Campbell's, and also BXP is down 0.24%, and Next Era is down 0.5%, 0.55. Okay, so this one I mentioned to you guys already that I'm feeling that this one, it could get stopped out. It's getting close. It's getting close to the stop. So I can see this one getting stopped out, maybe, if it goes down this week, but we'll see. We'll see where that one does. And PepsiCo, this one is down 1.29%. And, Conagra, General Mills, okay, because this is these are the options here, so we'll just kind of skip those. So, because I'm really kind of going off of the shares. Yeah, that's it, guys. And also so let me tell you about the options. The way I'm trading the options. I am trading the options alongside my shares. Okay, I want to see how the options trade in the same way that I'm trading them the same way I trade shares. Okay. Now, the thing with options is a lot of people go with options because of the large swings, right? But they also have large losses. So what I'm trying to see is, a series of 100 trades of option trades. what are the averages in the losses? Okay, what are my losses? Because that's the thing that I'm looking at. I can control my losses. I can't control the gains. So I want to really compare and contrast to see how the options trade against my positions, how they trade, in comparison to them. And after I would say after about 100 trades or so, we'll see. Okay, but so far they're in the green, which is good. But this is a slow. This is going to be again an experiment. But that is pretty much it, guys. This is my book. Okay, this is my book right here, and everything is looking pretty good. The market is I'm like only about 35% long. Okay, 35-40% long. So really, that should tell you what my market sentiment is. That being said, guys, I'm going to go ahead and take a short break right here, okay, just to grab some water and get a little snack. And then I'm going to come back and hang out with you guys, take your questions, do a little bit of stock reviews, and then call it a night and catch some sleep. So, guys, I'll be back in about 5 minutes, and then we'll continue, we'll continue on with the stream. Okay, guys, I am back. All right, let me get myself adjusted. Here we go. Here we go. All right, so get this back, and my mic is up. All right, guys. Thank you, Sheeny. Thank you. So, again, guys, appreciate you all kind of coming in and hanging out. So the first part of the show, I just pretty much kicked it off with everything going on in the world geopolitically and what that means financially, what that means economically. So if you missed that, it's archived on Twitch and of course on YouTube. Okay, so you can go back and listen to that. That probably was, a good idea on what we can expect going forward this week. So hopefully, the good thing is hopefully we can see this war end soon and all this carnage and and all that, because that's just a good thing. I mean, war is a disgusting thing. So if that can stop soon, well, that's going to be good. So, but that was the first part of the show. Okay. And then I just kind of went through and I told you guys what I'm in, how I'm playing the market, and what my positions are. So you guys saw that. Now I want to wrap up the show by focusing on you guys and taking the stocks that you have and pulling them up on the chart and giving you my take on them and just kind of, having a discussion on some of these stocks. So let me make sure, again, we have the queue open. All right. So all you're going to do is just hit ! chart space followed by the symbol and it'll go into the queue. Now I have some, for those of you who are on my Discord, I do have some here that we're going to kind of jump right into. So we'll kind of kick off those. We'll go with those first, and then we'll get into what else is on the list. So again, guys, if you have any stocks that you're looking at or whatever, you just kind of want to get a second opinion on some of these stocks, let me know. Just throw it into the chat, and we'll load it up on the charts. So let me see here. Let me go back to this. Why am I doing it on my phone? Let me look at the Discord. I have it right here in front of me. Let's see here what we have on the Discord. And okay, so where's my channel? Stock request. All right, so the first one that I'm going to pull up here, guys, is BP. BP is the first one that I will pull up here. Let's see here. All right, so that's the first one. I'm gonna move this. Okay, so BP is this is a little tricky. All right, this one's kind of weird. It's been going down while oil was moving up. So there was some, I think there was, this was one of the, I talked about cancel culture. I think this was one of the stocks that was getting affected by it because they had some kind of Russian dealings or something like that. No idea, but nonetheless, strange movement on BP. This was one that I thought about shorting, but something just didn't feel right about it. And I just decided, you know what, let's just go on to the next one. That being, just kind of pushing that to the side. This right here was some pretty good movement that I liked. Okay, I'll kind of zoom in a little bit so you guys can check it out. This was activity of note with BP. Okay, and why is that? Well, you saw it go up and actually touch that 20-day moving average and then come down. Okay, and then the following day, it continued moving lower. It's almost like it just wanted to give it a little kiss and then kind of draw away. And this right here was, for me, this would have been the ideal point to short it. That's where I was actually thinking about shorting it right here. Okay, after it did this move, because it's already in kind of in decline. It's already moving lower. We already have a downtrend. Okay, so this kind of movement here, that's something that I like. Okay, it didn't approach the 20-day with strength, but it actually approached it very meekly, and then continued its merry way. And now it seems to be penetrating the 200-day moving average. You see a little bit of a touch on that. Didn't quite break it. Okay, so some people would say, oh, okay, I'm expecting a bounce here, but guys, you have to remember that I'm looking at these stocks more from a position trader. Okay, I'm not looking for a entry in, entry out type of thing. I'm looking at them like, is this a good point where I can start building up a good sizable position in this stock? And I believe that BP is not yet. Okay, it again, maybe right here, this would have been ideal to start shorting. But the next point is I want to see it break. I would want to see BP break the low with conviction. Okay, that is with volume. Okay, and not only break, but actually not only break the low, but hold the low and close under that 200-day. Let me rephrase that. Not only break the 200-day, but hold under that 200-day. Okay, not close above it. If it can do that, that would be for me the signal. That's where it would be like, okay, this seems like a good ideal entry for it. If I wasn't already shorting up here, again, I didn't do it because something just didn't feel quite right with this one. Okay, I couldn't put my finger on it. I don't like trading stocks that necessarily have like cancel culture behind them, just because you never know. Okay, you never know. So I just thought, let's just watch this one. But again, if I kind of just went with it, just looking straight off the charts, the trade would have been right here. Okay, this right here would have been the trade. Okay, short starting right here and looking to add as it breaks under that 200-day. So this is where I begin. Again, you have to look at it, guys, like I'm starting a journey. Okay, and hopefully what I want to do is, as I continue that journey south, I want to fill up with gas. I want to drive and enjoy the view. So I really want to enjoy the movement down by building up good positions. So not just the entry point, but if it was just straight up entry and exit, this would have been the entry. All right, so if I was just straight up shorting it and not really building a position, but just I want to short it, I would have shorted it right here about 28.95. That would have been good. So but yeah, guys, so Sheeny, this is man, I'm all on this one for a short. Okay, I don't see anything really going on with this, but sell off. Okay, and until it changes its tone, that's what I see, man. So a potential target on this thing, I can see this one. Let me zoom out. I could definitely see it getting down over here. Okay, what is that, 25.56 or so? So yeah, I can see it getting around 25. What is this low here? This low is 25.33. I can see it, touching around, let's just call it 25.50. Okay, 27.86 to 25.50. You're looking at about what, 8%. So yeah, I can see that kind of movement going on with BP. Okay. Now again, I'm not some kind of, I'm not reading a crystal ball, guys. So I'm not saying that's what's going to happen. Don't go in short and say, oh, but you said, I didn't say anything. All right, I'm saying how I would play it if I was playing it. But again, you got to do your own work. You got to judge if the risk is worth it to you and whatnot. I'm trying to be here as a guide. Okay, as an experienced guide, telling you, look, I've sailed these waters a pretty good amount of time. This is what I know. This is an ideal, this is the ideal weather to kind of set sail in. This is, when you want to stay out of the water, steer clear of the northern winds or whatnot. Okay, steer clear of that. That's what I'm trying to do. I'm trying to kind of be like the guide to you and tell you, look, I know these waters a little bit. Okay, I've been in these waters a little bit, and avoid going that way. Okay, try to stay in this and avoid leaving out this time. So that's how I'm trying to be that guide. You are the one who has to get in your ship and decide, if you're going to take the risk. Okay, so hopefully I can help. Let's give this one a short. Let me go ahead and rate this one. Let me rate this one as hey, what happened? Where's my queue? So my queue is not there. Okay, guys, I can't rate this one. I can't rate this one because this one again was on Discord, so obviously that's not going to be there. But look, BP gets the bullish, definitely gets the bullish rating. Okay, so BP gets a bullish rating. Let me see what else we have, because there's another one. We had a couple of them that were requested. AMD is the next one for Sheeny. And look, AMD has had a nice run already. Okay, this one is already taken off. As far as, you know, does AMD have any more juice in the tank to kind of go lower? Yeah, possibly. Okay, but it's already fallen, you know, a good 31%, okay, or so. I mean, from the highs, you're looking at almost 40% that AMD has already tanked. So I think, you know, again, if this is a road trip, AMD is already, you know, pretty much getting close to its destination. Okay. Could it keep going? Absolutely it can, but it's already ran a good bit. It's already, you know, traveled a good while and took in some good sights. So we kind of already missed the train on this one. Okay. Ideally, we wanted to start shorting this thing right around here. Okay, as once it broke that 50 and started traveling under that 20-day moving average, this right here, my friends, was the time to start packing our bags and going on a short trip. Okay, no pun intended, but right here. So if we would have got in at this point on, you know, we're looking at now, we would have already, you know, been like down 25%. So of course we would have been short. We would have been up 25% because it's down 25%. So, you know, we would have shorted all this, maybe take some profits. If I was in it, would have been taking profits right here, probably getting stopped out right here, you know, and maybe getting back in somewhere around right here. I'm not sure. So does it have any, you know, any juice left? Is this thing, you know, still going to move? Again, possibly, but after it's fallen, when a stock has already fallen a good 20-30%, usually it kind of pauses, especially a big stock like AMD. Okay, you have a lot of people now who are probably saying, you know what, maybe this is a good buy right here. Okay, and buying it maybe. So if I was going to short it, I would just be, you know, I probably would go light shares. Okay, I wouldn't go so heavy, maybe a little bit and watch it, but I wouldn't go really too crazy on the short. I wouldn't treat this short the same way here that I would treat it right here. You know, I would be really really cautious on it. Okay, just because it's already had a good run. So that's, again, AMD, definitely you know, bearish on that one. AMD seems like you know, if it does have any life in it, definitely, you know, for the short. So that is AMD. And you're actually long AMD. All right, well, look, in that case, let me give you my take on how I would treat it long, Sheeny. Okay, if I was long AMD, I would be long, and you know, I would, let me see here, what is the range on this one is you got a $6.46. That's the range. Okay, what is that? So basically, man, I would have a 5% stop at max on AMD. Okay, that's how I would do it. And probably more like, yeah, I wouldn't not have more than a 5%. You know, if it's like 6.5, that's too much for me. I would put a 5% stop and really even try to maybe shorten that up a little bit if it kind of acts up. But that's how I would treat it. Again, okay, so here's the thing. All right, you remember what I always say. Okay, guys, you have to ask yourself, who is in control of the stock? Okay, that's number one. So right away, we know, guys, we are, look, let me switch to the daily trend. I kind of, you know, I put this here just so we can see a little bit more who's in control of this. All right, what direction is this going? All right, you have to look at the chart. You have to view this. Okay, period. If you are trading, you have to look at this, and you have to know that if you are going long, you are fighting all of these sellers. Okay, now if you want to do that, that's that's fine. You know, if it's worth it to you, it's worth it to you. Okay. But you have to know what you're up against. Okay. Know that you are swimming upstream, so to speak. Okay. You are going against the grain. Okay. Everybody is moving south and you are traveling north. Okay. I've talked about this and the analogy, like, you know, like if it's a highway, okay, if all the traffic is coming south, then you get in your car and you head straight into it. You are heading into oncoming traffic. You cannot be surprised when a position goes against you. Okay. You can't be surprised. So that's why I say, if I was in this one long, then I would be prepared to know that, okay, look, if I do get smacked on this one, I don't want to lose more than 5%. Okay. Because it could very easily break these lows and drag you down a good 10% or more. It could continue this journey. Okay. And you don't want to get dragged in that. So again, always start out by asking who's in control. Okay. And if you're going against it, again, nothing wrong with that. There's a lot of counter trend traders, but, you know, it's going to help you to be a better trader, to know what you're up against. That's the better thing. Okay. You can't, you know, it's a battle that you not only know, but a battle that you're willing to fight, versus people who buy it and don't even see this. That's different. Okay. That's completely different. That's like, oh, wow, I didn't know that I was buying a stock that was, you know, everybody was selling. Yeah, because you didn't look at the chart. But if you know, then it's a battle that you are expecting. It's an enemy that you are expecting to fight. Okay. So that being said, if the enemy strikes, just know at what point you are, you know, willing to throw in the towel. Okay. Don't let this enemy continue to beat you down. So this could be a really good long, actually. Okay. If it does bounce up, you can get some movement on it, but make sure the risk to reward is there. If you're risking 5%, you should be looking at 10% minimum. And honestly, that's not so great. Okay. A 2-to-1 ratio is okay, but you really want to get to that point where you're at least a 3-to-1 ratio. Okay. For every winner that you get, your winners 3, your losers are 1. Okay. That 3-to-1 ratio. If you're risking, again, you know, 1%, you want to get 3% out of it. Okay. If you're risking 3%, you want to get 9% out of it. So if you're risking 5%, you really want to get like 15% out of it if you can. That's the long-term game. You gotta think about this. Like, it's not the trade that matters, but how long do you want to be able to trade? So for, you know, that's the long-term aspect of it. So yeah, you bought this thing long. Like I said, I wouldn't be risking more than 5% if I took that kind of trade. It's a light entry. Cool. Awesome. The light entry is even, that's perfect. That's perfect, because as it goes into your favor, you can add more. But I'm glad you mentioned that, Sheeny, because this is not, I don't position trade against the trend. You can't do it. Okay. You can't do it, because if you're counter trend trading, you can, you know, maybe expect to get a little pop and then get out. That works. But you can't really, in my opinion, you can't really build a position on it, because you see, when you're position trading, as the stock moves lower and breaks the lows, you can add to it. That's how I do it. As the stock breaks lows, I add to it, and I kind of help it break the lows. Okay. I kind of lean on it with more pressure by selling short into the movement. So to continue and, you know, to add to that momentum. All right. So as it breaks lows, I short more. And even if it bounces a little bit, it's, you know, it's fine. It's not that big of a deal. But really, that's how I'm looking to do it. So as it breaks and moves lower, you add to it. Now, if you're counter trend trading, you don't really have that. Okay. Because what it might do is bounce up until it reaches the next lower high, and then it moves lower. Okay. So that may happen, unless, of course, it breaks this high here. Let me see here. So this high right here, if the stock can move up and break that high and create a higher high, then you may have a uptrend forming. Okay. But as long as it's still creating your series of lower highs and lower lows, you're in a downtrend. So I wouldn't recommend adding to your position. Okay, I wouldn't recommend that. But again, you know, you got to trade how you will. But just telling you how I would trade it. Okay, so what I would do, again, be light, you know, 5%, and at least try to get 10% if I could, which is not much movement for this. I mean, that's the Heikin Ashi. So a 10% move really is going to put you, yeah, almost like right at, let's see here. Yeah, so it's going to put you under that 200. So if it tries to touch that 20-day moving average and even the 200, it may carry you. I don't know though. I don't really. I'm just looking at the. I mean, maybe it might do that. We'll see. But who knows? Anyways, good luck to you on that one, Sheeny. Just be careful, man. Like I always say, be careful. Have your stops, and you know, in this case, you know, yeah, set it and just have it set. Don't if it breaks it, I would not recommend giving it any more leeway, because at this rate, if it does break this low and break, I mean, that's pretty much the low on both of these right here. There's your support. There's your support right there. So let's draw it. Let's see here. There's, yeah, so if it breaks that, it's going to go lower. You don't want to get caught in that. So, but that's my take on AMD. What else do we got, guys? We have, let's move on. WFC. Wells Fargo. Well, I already told you about the financial crisis that's looming. So, you know that I wouldn't be going long on this. Wells Fargo is one that I like. I really like Wells Fargo. And this might be a good time to short it. Not right here, okay, but maybe tomorrow. Okay, if tomorrow it can break that 200-day moving average, hold the break, and actually close under that 200-day moving average, I would let me make sure before I say. Oh, wait a second. Well, no. Yeah, they don't report till next month. Okay, so you're not in danger of any reporting going on. So if it can do that, you know, this may be one that I would be willing to kind of short up here. And again, guys, the max risk that I'm willing to take is 5%. So if I was to take a short position on Wells, definitely, you know, at the very least, a 5% stop. But if it can do that, that would be good. Okay, so I would feel comfortable with Wells Fargo if it could. Again, this was today. Okay, so tomorrow, if it could do something like this, you know, where it opens up, it breaks the 200-day moving average, and all day it can't beat it, and it closes under that 200-day moving average, that would be a good entry for me. Okay, so I would be comfortable with shorting Wells into that movement. Yeah, so I guess that's all there is to say on Wells, right? I would short it, but we'll see what it does tomorrow. Now, tomorrow, if it continues to move higher, then I would just get out of the way. That doesn't mean that I think Wells Fargo is going up. I think the stock is still trending down, but it may continue to search for a lower high. Okay, this might not be the lower high. It may continue to kind of trend up a little bit till it finds it, and then finally, you know, hit it and then move down. Wherever, you know, maybe the sellers are not here yet. As it moves up, then it'll find that level where it really gets sold off and it can't move any higher. If today was that day, then tomorrow it's going to be a down. It will be down, and you'll know that it hit that point where the sellers are just, you know, are selling into it. Okay, it can't move higher than that. So that could, I mean, it could, okay, but at least you kind of have an indication on where the sellers are really kind of coming in and not allowing that stock to travel further up in price. Okay, so Sheeny, you say? I have Wells Fargo long. Okay, so yeah, man, I don't know. I mean, this is a pretty nasty drop. Maybe you're trying to catch some kind of a little bounce, maybe, But look, I think the guy was saying right before I got on here, you know, you're risking a little bit. You're risking, you know, a little bit to trying to catch a little bit of a movement. But really, look, I'm going to tell you, your trading is going to be a lot easier when you stop fighting this trend and stop trying to find bottoms. Okay. Bottoms are very popular with a lot of retail traders. I don't know any professional traders who try to trade counter trend. I mean, maybe a few, I guess, but most this is mostly a retailer's way of trading, okay? And it is for the most part, it's man, I'm just going to come out and say it, okay? This is a strategy that a lot of people use and basically bleed their accounts on, okay? It's very popular, people trying to nail bottoms. It's a lot easier when you stop trying to figure out a bottom and all you do is just kind of go with the trend, okay? You know, this is the path of least resistance. So what you're doing is you're giving yourself a lot more fight, okay? And if you're trading, what you want to do is give yourself less of a fight, okay? It's kind of like, which mountain do you want to climb, okay? If you don't really want to climb a mountain that's just kind of going to take it all out of you, okay? You really want to kind of go, you know, you want to travel down the mountain, not climb uphill. That's a better way of saying it, all right? So look, I think personally, Sheeny, you're gonna find that trading is gonna be a lot easier once you get on this side of the trade, okay? Instead of this movement here, because a lot of what happens is, yes, the stock may move up a little bit, but it's not like it's ready to go. All it's doing is just having a small pullback, and then it's going to continue its trek down. So a lot of times what happens is retail traders, they get stuck in this movement because they're trying to nail a bottom, and what happens is, more often than not, those trades go against them, so they end up, you know, getting hit rather than just kind of going with the flow. I would, you know, again, I don't want to tell anybody how to trade, but I do suggest that you stop fighting the trend here, because the trades are gonna come to you, if that makes any sense. When you make a trade short or long and the trend is there, it's gonna kind of, again, like I said, it's like a sailboat. The wind is going to take you where you need to be, and you don't need to put so much time and effort in trying to, oh, is this the bottom? I'm gonna nail this little bottom right here. You don't really have to do that. But you know, take it however you take it. You know, again, just kind of trying to give you my advice. But I would be short all over this thing. So anyone who's basically buying right here, I would be taking the other side of the trade with the, you know, again, a really small, you know, like 5% or so. Okay. So the odds are that it's not going to travel. The odds are that Wells Fargo is not going to travel 5%. It's going to travel a little. It's already traveled 8%. So I don't think it's going to go 8% plus another, you know, to like 12. I don't see it doing that. It doesn't have the strength. I mean, it could, but I don't see it doing that. I see it kind of, after it's moved up a good 8% or so, it's, you know, going to get ready to come down soon. So if you're getting long here, you might catch it as it takes that dip again, you know, and starts moving lower. So you say you entered short on February 18th. Right here? You entered short? Okay. Nice, man. That's a nice one. You caught it like right at the, you caught it right before it really dipped. I mean, not dipped, but before it broke. Nice trade, man. That's awesome. So you caught it here on the 18th, and on the 5th, you sold this thing. You mean on the 4th, right? Somewhere around here, you sold it. So you walked away with about 12% or so, 10, 12% on the 4th. Yeah, okay. So you walked away on the 4th. You got a good 10, 12% on this thing, somewhere around there. And then you yeah, so you see, like okay, yeah. There's a little gap right here, small little gap. Maybe it moves up into it. Well, nonetheless, it's a nice trade. I think there's more room to the downside on Wells. Okay, so let's just say that. That's why, I would be looking. Look, tomorrow's going to be a good key day on this one. No matter which way you cut it, Wells Fargo tomorrow you're going to have your answer tomorrow. Okay, if it breaks past these highs, okay, if it breaks higher than this, then it could very well continue to move up. Okay, and maybe you can get whatever you're trying to get out of it. Probably 5% or so. That's what I would see it kind of traveling, like maybe 5%. I don't know. But tomorrow is going to be that answer. If it breaks above the high and holds it, then yeah, it may have some juice. It may start, it may move up. And again, like I say, I kind of see it traveling anywhere from 5 to 7.5%. If it does not, if Wells Fargo breaks the lows of today and breaks the 200-day moving average and holds under the 200-day moving average and holds, if it holds under the 200-day moving average, then that's definitely holding above the low of today. So if it does that, then you have your answer. So anything up here, probably going to go. Anything down here, and it's probably going to, continue to move whichever side it goes. So tomorrow is going to be a key day, I think, for Wells Fargo. Yeah, that's how I would do it. So we shall see, man. What else do we got? I know we have some for Jerry. If Jerry hasn't fallen asleep, if he's still in the room. But either way, I still want to, pull him up. I still want to pull up the... Okay, so Jerry was asking about AMR, Steel, and Diamondback Energy. All right, so let's look at those. Let's look at AMR. Oh, wow. Yeah, look at this. Let me rewind that. Look at that. Nice. Moved up really nice on this break and then basically pulled back fiercely. So now you have yeah, look, okay, so this is one where if you went long here, you have a range $14.60, which is wow. Okay. So this is one where, if you're placing a stop according to its range, you're looking at a 10 to 12% stop. So that's too much risk for me. However, if tomorrow this one turns around and holds above this low, closes above the close of today in this territory here, maybe you can go long. Okay, maybe you can go long, but the thing that, again, I don't like about AMR is that it has such a wide range that it may force you to take a stop that's, in accordance to its range. So you could, again, be looking at like a 10 to 12% stop if you're moving with the stock. So I would probably wait for AMR to break these highs and then maybe get up over here. Okay, if the risk wasn't so strong. Again, I don't like taking more than 5% stops. So if I can get in somewhere here and risk only 5%, yeah, I'll take it. Now that's the part. That's the, that's where you have to find what is your entry. Is it right here? Are you going to buy it right here? Are you going to buy it, and then if it breaks under the 20-day, you're going to sell it, or are you going to let it continue to drift? That's really kind of where it is. I think we have to see what it does. But right now it looks like it's in kind of no man's land. So I would give it a little longer if I was going to buy in this area, or I would just wait and, kind of be chilling and hanging out up here until it breaks above these highs, and then maybe get on it at that point. But right now it's just pretty much wait and watch. Now, if I was in this stock already long, I would have taken profits. Of course, I would have been taking profits all as it was going higher and probably adding to it. But right here, this is where I pretty much would have, called it a day and, just liquidated my position. Okay. Right here. Okay. I really wouldn't want to take this whole ride down. So I probably would have, maybe got out somewhere about right here, 122 or so, which is about, again, yeah, that's a good 10%. So if you were doing a 10% trailing stop, then, you would have got stopped out today and kind of locked that in. So that's how I would have played it. So, would I just stop and that's it, move on to the next one? No, I would be looking at, this is coal, by the way. Okay. We've already talked about commodities, raw materials, energy. Coal is going nowhere but up. Okay. So, I would just be waiting for the next entry on AMR if I was going to do that, which again, I'm not, because just by looking at it, like I say, the range, the way it trades, it's just, it's too wide of a range. So I really don't want to take that unless, like I say, unless I can get in with only risking 5%, then that's a pretty damn good trade. Because if you could, this is one of those stocks that you can get in, and with the way it moves, you could be up quickly, good 15-20%, because of its of the way it trades. So AMR, yeah, bullish on this one. So, and I think I pretty much already said how to play it. Let's look at steel, U.S. Steel. Okay, so this is U.S. Steel. This is another one. Okay, I think this is going to continue to move higher. This is, raw materials, steel, high demand, of course. And look at this. Okay, this is strong. Entry point. The range, I would say, okay, so the entry for me on U.S. Steel, I really would have tried to kind of get in right here. Okay. This would have been the break that would have told me jump in. Okay. Now, if I missed that and I'm looking at it long, again, I would wait till it takes out these highs. So that's my take on steel. I would just wait for it till it takes up the highs and then maybe get in there. Okay. So, Jerry, you're still in the room. Cool. Awesome, man. Glad you're still hanging out. So yeah, look, steel, this is pretty much the same thing. I would be up here with some orders. Okay. Maybe put some orders right up. What's the high here? Well, I wouldn't just put an order and wait till it hits, but I would really want to see how it breaks that high. Okay. If it breaks it with conviction, with some, at least decent volume, then cool. Maybe that, that's the, that would be the entry for me, but I would be kind of waiting for that. But again, completely, 100% bullish on, steel materials. What's the, let's see what the next one is. Okay. So, and then we got FANG, Diamondback Energy. All right. So this one's a little different. This one is a little different. Strong, bullish, but it's pulling back. And now it's breaking that 50-day moving average. So this is a cause of concern. I would be, if I was in this stock, I would be right here. I would be pretty much taking profits. Now, this is one, okay. This is one where maybe if people, you know, look, all right, so this is one where if I was going to buy it, it's already kind of in this channel. Let's draw our channel lines. Okay, you pretty much have a channel going into this one going on. Okay, there's your channel. Okay, right here. It's ping-ponging between this high and this low of 136.66 and 122.56. Where is the stock right now? Pretty damn close to 122.56. So this may be one where if I bought it, I could buy it right here and have a stop right here in case it busts these lows. So I would be trying to not only see, I wouldn't be playing it though for the channel. Okay, I would be playing it so that hopefully it breaks above 136.66 and above these highs, breaks above these highs. So really you're looking at a risk here of about 4% in exchange for 12%. If it not only hits those highs, but if it breaks it, it could be even more. That's a pretty good risk reward. So that's how I would do it. Okay, if I wanted to trade this one, and again, that's a 4% risk. I'll take that risk. Again, I like anything under 5. So if I was gonna do that, maybe that might maybe it may be that trade, but I wouldn't trade it. Okay, even though I said maybe, I wouldn't take it. Okay, just because I don't like that it's breaking under that 50. Okay, I really want to see the stock above it and trending nicely. I don't want to see it starting to kind of break down. Okay, so if we look at our daily trend, I'm not really too crazy about this. Okay, I'd rather see something that's giving me some nice clear direction and something I don't have to fight with. You feel me? Something I don't have to fight with, but something that's already telling me, look, this is where I want to go. Either you want to kind of jump in and let's go, or or you just kind of watch it. But when it's kind of doing this, this ping pong action, there's easier things to trade. Okay, so but on the positive, 4% risk for about a 12% gain is not bad. So if that's worth it to you, you got to decide if that's worth it to you. For me, it is. But again, look, there's hundreds of stocks. So I would probably just put this one on my watch and then continue to scroll and look at other stocks and try to pick, try to cherry pick the best trade. Okay. And if I couldn't find anything, then it's like, all right, maybe I'll take this one. But there has to, there's so many stocks. So maybe there's a better pattern out there than FANG. Yeah, no problem, Jerry. No problem, man. You're sitting on your, are you, so you're not long in this one, right? You're just kind of watching this. Ishini, no problem, man. I am here for you. I'm here for all of you guys. Guys, I want to just, look, I want to see you guys succeed. That's why I'm here. That's why I'm doing this. Okay. So, if you tell me a stock and I'm like, yeah, this looks like a good time to buy it, and you're short. Again, I'm not trying to step on your toes, but I do want to see you guys succeed and tell you what I see. And I tell you, there's nothing harder than fighting the stock. That's how people lose. That's just it. People lose in this game because they fight the market. They really do. They try to find the bottom when the market is telling them the stock is going lower. So what you're doing is you're trying to trick the market. You're trying to fool the market, but the thing is you can't. You cannot trick the market. You can't. The market is the market is the leader. You see what I'm saying? Like, you can't tell the market what to do. The market tells you what to do. The market tells everybody what to do. And it's those who fight the market that end up getting destroyed by it, or at least humbled by the market. Okay. It's easier when you listen to what the market is doing and you say, okay, great. I'm with you. You're going low. Then I'm with you. I am shorting. instead of you're going low, but I know better than you. I'm going to find the bottom and I'm going to buy there, and I'm going to tell you, the market, when you're going to come back up. You can't do that. And that's how a lot of people get killed, is that they fight the market. They try to outsmart it instead of just seeing the sequence. 10, 9, 8, 7, 6. What's the next number, guys? Well, some people say 5. They're going with the sequence. You're going with the market. But some people say, no, it's not 5. It's 7. And it continues going. It's just easier. Trading becomes so much more easier when you flow with it. So hopefully that helps, guys. And if you don't believe me, here's a good experiment. Take one trade where you counter trend, okay, where you go against the market, and take another trade. Force yourself to take 2 trades. Take another trade where you go with the market, and do this for a series of trades. And then you'll start seeing the stocks, the trades that I make where I'm going with the market, those have the higher probability of, those typically do better for me than the ones that go, where I'm trying to go against the trend. You'll see that you'll start to see that. That's something that you will learn, that the market will show you. I can tell you about it, but the market will show you that. The market will be your teacher. And if you do that, you'll start seeing, like, you know what? When you place these 2, trades, you'll see how they operate and how they work for you. So you're on the sidelines, Jerry, with Fang. Okay, yeah, I would be, man. Look, on this one, the way I would play it, I would just be, I would just be really looking into something else. Okay, look, let's see what we have here. Let me go ahead and go into oil and gas. Okay, let's just kind of get into that. This is the energy sector. This is Fang. Where are we with Fang? Okay, so let's just kind of scroll through some of the energy stocks. Okay, I'm just kind of scroll through them very quickly. Okay, and here's a better way of doing it. Let's let's just scroll through it. Okay, and just watch the chart. Don't even look at anything else. Just look at that. Okay, already look at this. Okay, this is everything the market is telling me. This is what I need. The market is showing me this is in an uptrend. This is a stock that I'd be looking at already. It's like, okay, this looks good. I would put that in my watch list. Let's kind of go on. Let's continue a little bit more. What is this? This is in a sideways stock. Okay, don't want that. Maybe this one here. It was in a downtrend pretty good. And now it's traded above the 50. Now it's trading above the 200. This one looks like it's, maybe decent. Let's continue on. This is nice. Okay. Uptrend. That is not what you want. But of course, this is played by retailers. You could tell because it's $1. Retail stocks do this. They kind of go and have a big explosion, like 100%, and then come back down. This is, yeah, look, here's the thing about these types of stocks. You have to look at it like this. Is this a trade you can repeat? And the problem is that most people can't repeat these trades. Okay, unless you're very good, most people can't compete. They can't continue to repeat these trades. They get in them and the stock jumps up like 40% or 100% or more. Okay, and they get out, and then they look for another stock that's going to do the same thing. The problem is that it's very hard to repeat these trades. Okay, I mean, you guys tell me, what is it easier to find? A stock that's going to jump 80% or a stock that's going to jump 8%? Which one is easier to find? Okay, now people say, well, of course the stock that's going to jump, 5%, 6%, of course that one's going to jump, great. Okay, so here's the other thing. Before taking a trade like this, ask yourself, okay, for this type of trade, what is my risk? What's my risk? And that's where the answer lies into whether you're looking at this from a long-term perspective, or you're just you're looking at this for the here and now. And people who are trading for the here and now, they get wiped out by the market eventually. It's just a matter of time. Okay. You have to look at how long do you want to trade in this game. Okay. In other words, how long are you going to last in this game? Are you looking to trade for, you know, like, oh, I want to get my 90% and out? No. I mean, maybe that is, okay. For me, I'm not looking to trade like that. The risk is too great. I am looking to trade until I'm an old man, okay? I want to trade until I'm 80, 90 years old, if, you know, God willing, because for me, it's a long-term game. And the other thing too is that this is, you know, this is my work, guys, okay? This is my bread and butter. I don't go to some job and trade on the side for kicks or whatever. If you have a job, then it's easy to get in that mindset, okay? But if you're trying to make the transition between trading and, you know, work, you eventually want to quit your job and you want to trade for a living, then you have to think long term. And if you are thinking long term, then immediately your thought goes into, okay, if I'm going to be in this game for a while, I need to make sure that my losses are small, so that 1 or 2 losses don't wipe out my account or don't even bring it down to 30, 40%. So you're going to automatically say, I need to take those trades that are the least riskiest so that I can make sure I can continue to trade. So immediately these types of trades go out the window because there's too much damn risk. I've been trading for 15 years. I wouldn't touch this stuff with, you know, with a 10-foot pole or whatever. Okay. You guys feel me? I wouldn't. Why? There's too much damn risk. I would rather take, I'd rather take something like this. Okay. There's less risk here. I don't have to worry about a stock getting in that just drops, you know, 20, 30% in a day. So again, preservation of capital is key. So, I'm not going to go through the whole thing, Jerry, but you can see, like, you see what I'm doing here. If you find a stock that you like, you know, then search the whole sector, like just kind of go through the whole sector and try to find the best chart. Okay. Cause you already know, hey, I like oil and gas. We already know geopolitically what's going on. You know, we already know that stuff. So now we're just trying to find the stock that is, you know, is in agreement with all of that. So, I mean, look at this one. Look at this. This is an incredible movement. So there's a lot of stocks. So that's how kind of I do it. I start kind of going through and just kind of combing through the sector and favoriting the patterns that I like. Basically anything that's in the trend. And that's pretty much it. I mean, there's a lot more to it, of course, but, you know, that's how I kind of, you know, try to find the best character in the bunch. You know what I'm saying? So, you were thinking of running some bank if it bounced off the 50. I still like it if oil moves back to the upside. Well, I think oil is going to move to the upside, but again, you know, I would just try to, you know, I would try to find something that's already in an uptrend rather than that's breaking down like FANG. Okay. FANG is having a little bit of trouble. Yes, it could bounce for sure. But again, do you want to get a stock that it may bounce, or do you want to get a stock that is just in an uptrend already? Okay. It's already kind of traveling in that direction. That's something you have to kind of ask yourself, but, that's how, you know, that's kind of what I'm looking for. And, all right, guys, I think right here is pretty much, this is my stop. I think this is where I get off and call it a night and catch some sleep and prepare for tomorrow. So look, I already left you guys with everything that I am pretty much trading. Okay. And mainly short. I'll just kind of go through them a little bit. $13 short and 6 long. Okay, so I have 18 positions in total. Again, majority all short, guys. Okay. And you can see on the second part of the live stream, I told you guys what I was in, kind of went through all of these. Again, Ventas, Colgate, Discovery, Starbucks, la-di-da, the list goes on. Okay, so a good number of positions. We'll see how the market continues to trend and how it continues to go. Just kind of leaving off with the Qs. The Qs are not looking so good. They're still, guys, it was just another sell-off day. Okay, this should not be a surprise to any of us. This is like, you know, it's like, oh, people, oh, the market's selling off. The market's selling off. You know, CNBC. You have to ask yourself if these guys even look at a chart, because it's not. It's like, what is there to talk about? What is the surprise? It's in a downtrend. Of course it's in a downtrend. There's, you know, like, what do you expect? So, you know, it's continuing to sell off. It hasn't been able to get above that 20-day. It's just been selling off, lower high, lower high, lower low, lower high. It's in a downtrend and nothing has changed. Okay, last Monday live stream that we had, I said the same thing. It's in a downtrend. There's no reason to think otherwise, because the market is giving us the sequence of lower numbers. So that's the situation on the Qs. That's the situation on the spiders. That's the situation on the Dow. That's the situation on the Russell. Okay, so the market is just in sell-off mode. Okay, and until it gives us a different pattern, or at least breaks these highs, then there's nothing to really be surprised about, guys. The market, the Qs have to break 349.51 and hold above. Okay, if they don't do that, just pretty much, you know, bearish. Okay, it's just going lower until it breaks 349.51, holds and moves up. There's nothing has changed in this market. It's just going to continue to sell off. Tomorrow though, tomorrow is going to be a big day for the Qs. Okay, because today, all right, let me just draw this out for you so you can see. Today, it not only, the low right here was 318.26. It not only broke that low, okay, it didn't break it very hard, but it did close above 318.26. It closed at 318.17. Okay, so it closed about 10 cents under, which isn't much. So tomorrow, what we could expect to see is probably some big time rally, because it bounces, and then they'll come up with some nonsense like, you know, peace talks or something like that. So something, instead of just, you know, just looking at what the market is doing. Okay, but you know, we could expect to see a bounce, or we can expect to see a nasty sell-off, okay, because it is at the lows, and it didn't hold the low today, even though it kind of did, because it still closed under it. It didn't have the strength to close above that key level. So could we see a sell-off? Possibly. Now, the other thing I want to mention, guys, before I get out of here, because this is important, you caught the beginning of the show where I talked about geopolitically everything that's going on, and how all of these things are not going to do any favors to our economy. None whatsoever. There is, I've been talking a long time about how I expect to see a good sizable crash. Okay. And if we do have such a crash, it would not surprise me to see the market come back all the way down here, which is, no, that's pretty significant. Okay. I can see it come all the way back down, which would be pretty big, pretty damn big. And what is it going to take for all of that? Dollar collapsing, devaluation of the dollar, energy crisis, housing crisis, everything we have, inflation. Okay. I don't want to see it do that, because the carnage behind that would be, well, it wouldn't be good for us. It wouldn't be good for our country. But with everything that's going on, and with our reckless leadership, like I say, guys, everything they're doing is a boomerang. It's not helping us. Okay. To tell American people that, hey, you know what? I'm willing to pay more gas prices to stick it to Putin. You know what? Screw that. Screw Putin. I just, why concern yourself with that? Why not concern yourself with the country? Okay. I'm telling you, the average guy does not care about a Russian president, does not care about what the heck's going on in the UK. They want to live. They want to live. That's it. They want a decent wage. They want to drive their car to work. They want to live. And if you can't give them that, then, what do you have? So I'm really disappointed in a lot of stuff that's going on. I wish people understood a little bit more about economics, but we have such a bad educational system that it's no wonder that a lot of these, you don't see the connecting of the dots. I don't want to go back into all that. You guys can, watch the video again if you want to, again, rewind it and see, why I think what I think and all this stuff. But I definitely could see the market coming down, at least down to here, which would be a good 20% drop from where we are now. Okay. And if it does come back down, there's nothing really to hold it from here to here. There's nothing. So it could be pretty significant. Now, I'm not saying we're there yet, so don't. But in the broad term, in the long view, it's looking like if the market continues to trend lower and break these lows, well, it's that's where we can end up. So and like I say, all of these things, when we have our banking crisis, that's just looming around the corner, and that's going to be worse than 2008. So what is that going to do to the market, as it already is? Okay, things to think about. So be careful going long. Okay, be careful going long in these markets. Don't fight the market, guys. Try not to get in that habit. Flow with it. You got to flow with it. If it's going down, work with the market. Don't work against it. Okay, you have to picture the market like, the market is telling you what to do, and it's up to you to decide whether you're going to listen to the market and work with it or try to fight against it. But people who fight against it, they end up getting crushed. So it's easier when you work with it. And yeah, that's pretty much it. Jerry says, what kind of crash are you expecting? Like a violent V crash, more of a long and slow downtrend? Man, I don't even know. Look, crashes are usually pretty quick and violent. That's how they work. That's what I would, my take on it would be, it's going to be a quick, ugly, just, downside action. I don't see it slowly moving down. Okay. Especially if it breaks this low. If it breaks this low right here, 260, that could be, because again, there's nothing holding it up. In other words, if it breaks this low right here, okay, the next support is at 260, which again is, that's like a good 20% away. Okay, so this is the next stop. Okay, but the stop after this, after 260, tongue tie, the stop after 260 is 167. Okay, which is 30, almost 40%. So you're looking at like 45-50% drop from here to all the way to 167. So these are the levels. Okay, if it breaks here, the next support is at 260. If it breaks 260, the next support is 167. So, again, I don't have some kind of crystal ball, guys. I'm not telling you it's going to do this. Don't go and load the boat on shorts. Okay, I'm just telling you what I see. Again, this is all for education. You got to figure out what you're going to do. But just be careful. I don't see any reason for anyone really going long in anything. But if you are, then look for those things that are showing, relative strength. Okay, things that when the market is down big, they're not down big, that are holding up. I already talked to you guys about Dollar Tree. Okay, this is one that I'm in. Okay, this is things that are moving up when the market is just kind of getting, you know, trashed. Walmart, this is another one. Okay, now this one, you know, it has a, you know, right here, it's going to meet some sellers right here. So who knows how it's going to work out, but nonetheless, this is one that I've been trading. So we'll see where Walmart goes. But Dollar Tree probably is the better of the bunch because you can just see the chart right there. Okay, this one's already at the highs. There's nothing above it. Whereas Walmart's, you know, if it breaks these highs, there's still some resistance here, and then of course you have some resistance right up here. So it does have resistance levels that it's going to meet. Okay, as Walmart moves higher, it's going to encounter the sellers at these levels. Whereas as Dollar Tree, once it breaks these highs, it's blue skies. I mean, really, it's just kind of there's nothing left. There's no more resistance. So until it finds it, but there's nothing that it's kind of going to run into, so to speak. Okay, it's wide open. So Dollar Tree is probably the best of these. We'll see how Dollar Tree does, but it's getting close to taking out the high of last week Wednesday. So hopefully this week it kind of takes out that high. We'll see, and I'll talk about it on Friday, on Friday's live stream. So guys, that's it. Yeah, that's pretty much it. Let me see. Just catching up with the room real quick. It'll be one of the biggest crashes, to be honest. Yeah, it will, man. It will. Guys, look, you know, this will affect the entire country. It's going to affect, you know, our friends, our families. So if we do see that, you know, let's just keep that in mind, that a lot of people could get financially hurt, you know, and you know, it could hit close to home, and you know, we'll just have to see. But hopefully we you know, we're doing it right. But again, we know these things. We can kind of see the storm. Okay, so I'm just trying to kind of, you know, wave the flag and keep you guys, you know, safe from traveling in that direction, because it could be a pretty nasty storm. Okay, so we can see it, and it looks like it's approaching, and you know, let's just prepare for it best as we can by getting our positions, first of all, you know, set up properly, and you know, just being cautious in our trades. Okay, not really kind of sticking our head out too much. And again, if we are trading, making sure that we're trading with you know, with the trend. I will always tell you guys that. Okay, so yeah, we'll be buying the dip. Yeah, man. So, hey, look, guys, I appreciate you for hanging out, coming in the room. Sheeny, Jerry, you guys are awesome. It was pretty, you know, pretty much the same of what we had last week. But again, we're seeing kind of the conclusion of this war. So hopefully that comes soon, because, you know, less lives lost, the better, you know. So we'll see how that plays out. And you might see a rally, guys. They may use that tomorrow. If you see a big rally tomorrow, they may say, oh, now there's peace talks going on between Ukraine and Russia. That may be the reasoning, that, you know, if you see a big rally coming off these lows, that may be the thing. Okay, because every day it's something different with these guys. If the market's up, oh, there's peace stuff. If the market's down, it's, oh, you know, whatever. Every day it's something new with these guys. So we'll see. But again, tomorrow's going to be a telling day. Tomorrow will be a telling day. So just be careful out there, and we'll watch and see. Okay, we could get one of these guys. Okay, and this was the 24th. Remember, I told you guys about the 24th. Last time it was at these lows, they rallied the market big. I got stopped out of like all kinds of things. Like half of my portfolio got stopped out, guys, and I was still green, by the way, but half of it got stopped out. Okay, that's the importance of using trailing stops. Okay, so it, you know, this was this was on the 24th, not last week, but on the 24th, and now we are once again here at these lows. So let's see what tomorrow holds. Okay. Yeah, that's it, guys. It is 1:30 here, Texas time. So peace and love, guys. Thank you so much for hanging out. I will catch you on Friday. Okay, I'll be here Friday, probably late as I usually am. Guys, I have everything getting set up. By the way, I just got my second camera set up, so I had to order some lights. I wanted to do a video over the weekend. You guys know I told you about that. I wanted to do a video about talking about a lot of this stuff, everything that pretty much talking about today. But need to get some lights because where I have the camera situated, the light is not so good. Okay, so I needed to get some lights there. So hopefully this week I get that set up and get started on these YouTube videos. Okay. Until then, though, let's find somebody that we can raid. Let me see here who we have. Who's up? Should we usually in stocks and what's going on here? Okay, there we go. I tell you, my mouse, like it, it's maybe it's time for a new mouse, guys, because every time I click, it's I'm getting this double click. I'm only clicking one time, so maybe the button's kind of getting worn out already. It doesn't look like anybody is up in stocks and bonds, guys. Looks like everybody is pretty much asleep. So the question is, who is there to raid? Who is there to raid? Is there anyone that we can raid? Maybe somebody doing music. I don't know, man. Yeah, and everybody is asleep who I have on who I'm following. So yeah, let me see somebody who's doing music, guys. Let's take it over there, or maybe somebody just chatting. No, there's let me continue. Let's see here. All right, let's see here. Oh, somebody is doing that's yeah, live trades. Live trades, no. Let me see what's going on over here. Just chatting. Good vibes. Road to 200 subs. Okay, guys, I'm gonna help this streamer try to get to 200 subs. I'll try to send the vibes her way, I guess. No, why? I don't want to bore you guys, man. I don't know.
Love that. How are you? How you doing? New York, but also done in Arizona. Arizona seems a lot chiller. I don't know. If I would ever move to the States, I don't think I ever would though.
No. This is where it kind of gets like, I'm like channel surfing, trying to find, someone to raid into. But let me see. Let's see music. Anyone in music? I really like passing the positive vibes. That's important for me, man. So that's part of the reason why I like to do that and carry on the party. Guys, I'm beat though. I can't find anyone. I'm gonna have to find somebody, that maybe is up late at night. So I'm gonna do this. Okay, I am going to raid a room, which is a very strange room. I'm not gonna tell you guys what room it is. Okay, you'll see it. You'll see it when I raid there. Okay, but it's a pretty interesting room. Okay, so there's really nobody in there. I mean, there's a few people in there, but look, it's a cool room though, nonetheless. All right, and I like actually going and watching some of the stuff in there. So guys, I'm gonna raid this. It's not even a person, it's just a strange channel, and I will we'll kind of go over there. And if you guys want to stay up and just kind of watch this channel, you may find it interesting. So let me see how I can do that here. Yeah, it is very interesting, Sheeny. You will probably appreciate it. Jerry, I don't know how old you are, but let me see here. Okay, guys, here we go. Getting ready to raid. Like I said, it's kind of a strange channel, but pretty cool. Me and my daughter like it. Okay. So yeah, that's it, guys. Sheeny, Jerry, everybody in the room, thank you for coming and hanging out. Let me give a quick shout out if I can. Who do we have? Consensual bird watching. I don't know who if these guys are, just bots or whatever, but Lagos, P-Stash, nice seeing you, and Santa Claus came in here, and Serena, shout out to all of you guys. Everybody, thank you for coming in the room. I will catch you guys on Friday for the live stream at 3 o'clock, and I will be I'll see you guys then. Okay, if you're not following me on Discord, follow me on Discord, and any changes to the channel, anything like that, I do my updates on there. Okay, so peace and love, guys, and here we go into the raid.